Hey, what's up, everybody? So we got Thursday, episode 66. So I've been doing this 65 other times. Thank you so much for joining me today. Okay, I got a case study real quick for everybody. Like, a Harvard case study. I've got a case study actually happened to one of my members. I'll tell you what happened, what could have happened, and what should have happened. All right. So the case study is on the UVXY, which is the volatility index. It's like the VIX, but it's on steroids, basically. It's supposed to be 1.5 times the VIX. So here's the case study, okay? Heading into this afternoon, I mentioned I thought the UVXY would be at its lowest point all time at the end of each day, okay? So that's first, okay? That was my presumption. I was incorrect, but I expected to drop heavily tomorrow. It should have been about 4% lower, but that's not the point. So the case study, here we go. So this person had a lot of put options. We were hoping the UVX, or assuming the UVX was going to go down based on my original prediction. When it was spiking, okay, on its way up to $29.55, on its way up, I took my positions and I sold them at like 28, maybe 78, all the way up to $29. I was unloading them, okay? Now, I was unloading them knowing that I was going to repurchase when I figured the peak was. Whatever the peak was, and it happened to be $29.55, I repurchased at $29.40 going down. So I bought in more puts, okay? I bought the $29 puts. So here's what I did. I saved 18%, okay? I had a strategy when it was spiking, what I was going to do. If I exit out, I want to re-enter at a higher point and save money on my portfolio. So that was what I did. And again, I'm an experienced trader. I'm not a financial advisor. I tell you guys what's going on through my mind and how I trade, okay? Now, here's the case study. This individual who's been holding tight all week was down like $50,000, then went down to 14,000. They were only down 14,000. Then yesterday, they were finally positive by about 25,000. And again, we're expecting the UVXY to go down. So this individual is looking to make more money, okay? As it's going up today, he broke the rule because we zoom out, we don't zoom in, okay? So whatever happened is going to happen in the market. And I guess the internet went down for some mega companies. So what happened is, as it's spiking, he sold. And he didn't sell with a plan to re-enter as it's going back down. So he just cut his profit down from being up like 25,000 to hopefully being positive. He told me he was still positive like 20%, but I don't know. He'll have to get to that. The second case study also revolves around the UVXY. An individual reached out to me at 11:30 a.m. and said, I'm overly heavily levered into UVXY puts. It's spiking right now at 28, like 73. What do you do? And I reached out to him and I said, the first thing you do is you reach out before the market opens and you share and you say, I'm heavily levered and I'm nervous because I could technically blow up my account. And then you say, here's my average, here's my put strike, what do I do? And then before the market opens, we say, okay, if you get a spike either direction to this, you can unload 3/4 of your position, you would carry less forward. Here's your plan of strategy, okay? Instead of asking pre-market and having a strategy planning ahead, I'm not sure would have executed or not, but instead of having a strategy, this gentleman was just counting on it going down, and when it went the opposite direction, he was stuck with potentially blowing up his account, okay? Now, I told him, he said he was down 70%. I said it's risk versus reward, okay? You've got 30% less, okay? If you're correct and it goes down tomorrow, and I'll explain what I think in a minute, all right? You could salvage your account. It'll be back to even. So you're putting up the 30% to win the 70%. It's a 2-to-1 ratio. It makes sense, but I don't control your accounts. I don't tell you guys when to sell. I tell you when I'm entering into a position. I tell you guys when I am averaging down a position. I give you strategy and how to plan ahead. I might say I like a call. Somebody might like a put. If they can make 50% before I make 50%, good job. All right, I don't get angry. We trade without emotion. We trade with math. We trade we can't let other things impact us. So when we put in an order, as soon as it gets executed, boom, we're looking to turn around. I'll mention what I did today as far as my trades. But let's get to my Bitcoin theory real quick, because I might have nailed this. When Bitcoin was spiking and it was up to 32,000, I said that Tesla has to report that they're going to lose 100 to 125 million on their Q2 earnings because they have to realize Bitcoin is a loss because it dropped under their purchase price. Okay, so a great PR scheme would be if Bitcoin spiked to like 34, 35,000, something like that. Then what I read that Elon's buying Bitcoin, that Tesla might let Bitcoin back to purchase Teslas, and that I read someplace crazy that what SpaceX, the company, was buying Bitcoin as well. All right, so that's just a theory I had. Maybe it's coming to fruition. I'm still waiting for crypto to explode. Yes, I think it's going to explode, and I think it's going to explode multiple times. Like a firecracker, bang, 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 bang. I think we're going to get spikes, consolidation, spike, consolidation, spike, and it's just going to keep going. So there will be time to get into Bitcoin plays. All right, same way I went on the record with UVXY. I wanted to go on the record today at 12:48 p.m., okay? The Dow was still down by like 20 points. Tech was up by 15 points. I did public Twitter, private Twitter. I did a broadcast, and I said, I'm putting myself on the line. I got this feeling, this light weight lifted off my shoulders. And I knew the markets were going to finish green. I'm just looking at the charts, and I'm like, there's demand here. There's demand here. All of my trackers were showing strong. So I can't tell you if your individual stocks finished green on the day, but I said the market's going to finish green, which is why I was shocked the UVXY spiked at the end of the day. Volatility, the VIX index, went down. The markets finished the day out strong. I thought the markets would be green today. How is the UVXY positive today? Doesn't make sense. After hours, I haven't checked, but I'm assuming when I wake up tomorrow morning, it'll be off 5%. Futures will be green. Hopefully, okay. I saw the buying. So yeah, I'm going to continue that over. I think we saw consolidation today. I mentioned that pre-market. Pre-market, I said Dow stocks. Carnival is up 9%, 8%, 17% in 2 days. You're going to see some consolidation. Selling off, that means. It means nothing goes straight up, okay? So when your stocks spike, right, and I say we have a plan to sell, it's only because stocks don't go straight up. It doesn't spike harder, and you're like up 100%. I mean, it's just ridiculous. So we plan ahead, we get our profit. Okay, so we're done with my public tweet because I put myself on the line. I was correct, all right? I was wrong about the UVXY ending at the lowest point during the day, but my theory behind it was that the markets would finish green, would finish strong, and I was correct about that. The UVXY didn't respond. I can't help that. I don't have a crystal ball to control the markets. I do think it's going down tomorrow. All right. And again, I did re-enter into a position, a very large position, but I went $29 puts because it was spiking to $29.40. So I cleared out my position on the way up, and I re-entered all at once. I didn't do a 25% rule, no rules like that. Now, if you like the lesson, right, the case study that you heard, and if you didn't hear it, please go back to the beginning because it's very important. There are rules that I make up, and this individual basically broke all the rules. We don't get manipulated by the market, and we don't scare sell because we have a plan in place. When you don't have a plan in place, that's when you scare sell. And I mentioned this one individual, but 3 people reached out to me on the side, and I said, no, we don't sell. We don't scare sell. You probably sold at the bid. You probably got trashed. He's like, yeah, I was even. I went from even to like down 50%. I lost $1,500. And I'm like, and now? He's like, now I would have been even again. The point is, shit goes up and down. We don't worry about that. We have a plan. We have strategy. And we don't trade with emotion. But I'm going to talk about some specific trades, okay? Yesterday. Now, this is just for the first trade is only for I have something special set up for the Lifetime group. We have an interaction going on, and I mentioned Zoom yesterday because I don't want people on my platform to say, you didn't mention Zoom to us, because I didn't. It was a spur-of-the-moment thing. I mentioned Zoom yesterday that I was going into a very risky trade, all right, that expires on Friday, so it was a 2-day out till expiration. And the Zoom was 350 when I mentioned it. What happened within 10 minutes? It went down to 347, all right? My option was expiring that Friday. I was down 25%. Now, what happened this morning? Zoom went all the way up to 365, and I was out with over 100% profit. I actually sold on the way up at 362.65, so it went up 2 more points after I sold. I could have got 20 more percent. The point was, got 100%. Oh, Snap. Let's talk about after hours, right? Snap is rocking it after hours. I mentioned 63 was such a strong base, and boom, Snap options after hours, it's got to be up like 12%. I mean, they're killing it, okay? There was a lot of IV, and also I think Twitter's probably seeing some of the same. I don't remember who reported first. I think Twitter might be up 6%. Snap might be up 12%. Okay, but let's talk about positions that I gave out. Oracle had a huge sell-off today. When the internet for all these companies went down around, what time? 12:40, I think it was, right? 12:40? Maybe it was 11:40. I don't remember. Oracle went down from almost $91 to $90.10. And I circled it and I tweeted it out and I said, this is what a sale looks like. And I've showed this before. Whenever someone sells one or two major positions over a 5 or 10 minute span, it looks like a drastic sell-off. So Oracle dropped out of the sky. And I said, I went in, I tweeted it. Oracle stayed there for 5 or 10 minutes. If you got in, let's see where Oracle finished, because it would be pretty silly if Oracle finished where I said I got such a great deal. So let's see, Oracle, ORCL. Okay, finished at 90.69, not bad. So again, I got it back in at 90.10. It was fluctuating between 90.10 and 90.20. Okay, so that was one play. Blink, I got in. Now, I got in Blink when it was like 33.04, and I bought a few contracts, I think $3,600, and I tweeted it out, and I said 25% rule. And then it dropped out of the sky, 10-minute rule, because we all know that shit happens. When I give a stock, it drops. So it dropped hard, and it dropped to 32, maybe like 60. And I doubled my position. I bought these contracts, $32 $50 calls, which expire tomorrow, so they're risky. Understand the risk. I'm taking the risk here, okay, on my position, all right? So it was down to 70 cents, and I bought a shitload more. And now my average is like 82 cents. I think I was up. Let me just check to make sure I'm up, or else that, again, would be a terrible story. They're at 82 cents. Okay, so they're at 82 cents. I guess that's my average. So, okay, I'm break even. So I'm looking for Blink to go on a good run tomorrow. Keep in mind, I am 7 for 7 against Blink. So I mentioned this before. There are certain companies that I invest in, right? Put options in that I have a winning record. Tesla, 10 wins, 2 losses. Very important. You're correct against Tesla, okay? There are other companies like XL Fleet. I'm 0 for 4, 0 victories, 4 losses. I don't put too much money there, but I won't mess with that stock. All right, that's crazy. What else did I mention? Moderna. Okay, at 318, it spiked up to 326. I sold. I was waiting for the re-enter. I tweeted out again to everybody, and I said Moderna looks good, and you don't have to overpay. You didn't have to overpay 324, 325. It went back down. So if you plan ahead, if you have a strategy, you're back in. Now eBay. All right, I love eBay. I almost forgot about eBay, and eBay is so crazy strong. Now, what I love about eBay is when I said eBay was going to finish at $70.40 last week, I got called a joker. Then I said it finished at $71.40. That would be my exit price. It's $72. It's holding strong. It's a beast of a company. If you look at the 1 month chart, it looks great. Now, again, I still have stock, $77 my price target. My options I sold, another 100% gainer, okay? So that was great. What else do I got to tell you guys? Oh, here's really what I want to do. Okay, so here's the special, okay? You get what you put in, okay? So anybody that doesn't have time to watch YouTube, which I consider to be an after-school special, they're missing out, okay? They're missing out on some learning. You get what you put in. If you want to watch different episodes, I could reel off a whole bunch of numbers that are important that Ask Matt's. There's 3, 8, 17, 18, 37, 42, 52, and this one's damn on point. And yesterday's was really good as well. Again, each one has a lesson or a topic. I've never given a case study before. Today's happened to be perfect because when I was talking to the individual, I said, tell me you didn't sell. And they were like, yes, I sold. It was spiking. I sold. I'm like, did you re-enter the top? No, you did not. So we didn't have a plan. We watched it. We were hoping it was going to go down, but we didn't have a plan. So that's what makes it a case study. Again, the person that was over leveraged that could blow up his account, he did not have a plan in case it spiked and went the wrong direction. What was he going to do? He was asking me or asking everybody in the Twitter world at 11:30 what to do. Nothing's wrong with asking people. But if you ask pre-market, you get feedback like, okay, if you want to sell a market open, you wait for the spike. When you see the greatest spike, you could buy different options. So you pull out, you're down 50%. When you get the biggest spike, you're in again. Now you're up 20%. You're only down 30% with a much better strike. So there are different strategies that I would have come across and introduced him to. Let's talk about what we think about the market tomorrow. Again, I'm a bullish guy. I saw what I needed to do when I predicted the markets were going to finish green today, and they were hesitating at 2 different points during the day, okay? But let's talk about the prediction I made at 12 12:48 p.m. when the markets were still down. And I said they both finished green and probably finished strong. Yes, they were on that way. Then there was a sell-off at 3. Then there was a buyback at like 340 or 350. Okay, I know the manipulation is there. That's what these banks, institutions do. They scare sell all the bullshit that goes on during the day. Mostly retail sellers playing the momentum. Somebody starts something and then it goes down. I mean, it's crazy. The banks always step in and grab the bottom shares. So, I mean, I don't know what you guys are doing. Anybody that sells at the bottom or sells at the worst point, okay? Here's what it is. I'm a contrarian, okay? So just take this one point from this whole video, and then I'm going to ask you to give thumbs up after I share this point. This one point. When things appear the worst, and you could use this for life or markets or options. And people might say this is the dumbest shit they've ever heard. But here it is. When things appear the worst and they look the shittiest and there's no hope whatsoever, man, that's when I see the glimmer, the shining, silver cloud or whatever it is shining through. I see it, okay? When people are like, oh, God, this is the worst. It can't get any worse. I'm like, all right, well, that's what you're thinking. And I think the opposite. Here's what you're looking for. And this could actually happen. And one day it'll turn around. It's like we had 5 bad days in the market that ended with Monday. And Monday evening, I got on YouTube and I said I put all my options money in the UVXY and it had just spiked. And people were calling me an idiot because it could spike to 40, 50, 60. I mean, the comments I heard. The point was, you stick to your guns. You have a theory. You execute it. For anybody that's not executing, that's what the problem is. You're getting scared. You're letting the institutions manipulate your mind, okay? Or you're doing something at work and you're like, oh, I'm having a great morning. You let that get into it. You're like, I'm up $1,000. And then when you're down $1,000, you're like, shit, I can't take it. I'm out. All right? If you've done that before, the point is, if you're happy with 1,000, secure that shit. Wait for the dip. You don't have to be in every single play. All right. All right. Now, if you get this and you're getting content from this and you actually like my videos, give me a thumbs up. Subscribe. OK, I really appreciate it because everything we do is analytics with YouTube. OK, I know I mentioned before I talk quick and someone said slow it down, but I'm always trying to get out information. I'm trying to answer as many questions as possible. Anyway, I appreciate everybody that's here. Hopefully you guys appreciate me. I'm going to get you some slides real quick, and then I'm going to go over a couple of quick stocks, and then I guess we'll go to it. Oh, you know why the market crashed a little today? Jim Cramer predicts S&P is done getting slammed. Sees upside. What? I mean, why? Is he kidding me? On Monday, I told you the market was done getting slammed. We saw a strong mega Tuesday, a mega Wednesday, and he comes out now this morning. He says or last night, it says the market said, what the I mean, this is bullshit. It's like seeing the final score of the game. Yes, I think Tampa Bay is going to win the Super Bowl last year. No shit. I mean, and he wants credit. Go to another slide. Do you know how stressed I get every day? I feel like an air traffic controller because I put myself on the line. There we go. Putting myself on the line at 12:50 p.m. And I said it's probably 12:52 now. The Dow was down 20. Tech was up 15. However, I believe the markets are going to be extremely positive today. All right, let's get another slide in there, please. I put myself on the line. He calls that shit. Here is my Houdini prediction. I did a video for my platform members because I wanted to know how strong I believe the markets would finish green today and not to be fearful of the manipulation that goes on with the fake news and the institutions. All right, next slide. All right, either that or I wanted to show off of that pretty face. eBay, right? I was looking for 70.40. Boom, we got to $71. Get the hell out of there. It went to 72. eBay's a powerhouse. Next slide, please. Try and go through these quicker. Oh, this is just Zoom. This is when I sold this morning. So I sold on the first spike, right, at 362, like 65. It went higher, all right? I didn't care that it went down or went higher. I don't even know where it closed because after I sold, I don't care. We trade without emotion. I lock profit up. Next slide, please. Oh, UVXY. So funny, this morning, again, I was mentioning thinking I was going to sell. Instead, I ended up buying an additional position that I made a quick profit on. This went from 157, what I paid, all the way up to like 205, which is what I sold. And it was in like 10 minutes. So this one was pretty quick. I made a quick $1,000. We pick, we choose, we scrape, we scalp. That's what we do. We grind, okay? We have a plan. If I had held, I would have probably lost a little money on this. I wonder where this is. Let's see, 157 on the what was this? I don't remember. Maybe the 29.5. 29 and a half, 157. I appreciate everybody waiting for me because I'm going to get to your stocks too. 157. Let's see what we got here. Options, puts. All right. Okay, so it would be about 132. So it'd be about 22 cents down. Yeah, thank goodness I unloaded and collected profit. Understand, if I didn't take profit on that one, I would have lost or been losing and holding a bag. Instead, I made profit on this one. I took profit on all of them, and I re-entered with a better strike at $29 when it spiked at $29.40. It spiked higher, but I got in at $29.40 because I said that is where I think is a good point. Next slide, please. We're almost done. I only got a couple slides. All right, UVXY. Again, Josh locked up profit. This was 12:28 p.m. So, again, I guess it was before the spike. Good for you. We lock up profit and we repeat. Hopefully, he bought more puts on the spike. I know a couple of people did. And when I say a couple, I mean like 20 plus. All right, next. Because they show me. Everybody started DMing me on the side today and yesterday, showing me that my rules work. You know what? I'll talk about that after the slide, and then we'll get into questions. What was this? That was the most money I ever had in an option. Okay, yeah. UVXY, great. Good one. Next slide, please. Okay, this is Oracle. Right, so I mentioned this pre-market, what I'm expecting. My out on Oracle was $91.50. It did not hit $91.50 today. Okay, remember, I got in on the dip at $88.40. So somebody says, how do you average up? Well, I mentioned today, Oracle was at $91. When it retraced all the way to $90.10, I bought more contracts. That's how you average up. That's how you support your position. Oracle had two directions. It could either fall harder for some reason and drop $5, $6, $7, and I would trash my position, or I was going to be correct, and it was just one or two institutions selling large positions that forced it down. Next slide, please. Don't understand. Don't know where the VIX finished at today. But what happens, the VIX, the UVXY is supposed to be 1.5 times the VIX. So the VIX was down, what, 1.73. UVXY should have been down 2.5%, 3%. It wasn't. It was like 1% behind. It's a little more now. So again, I expect it to fall 4 or 5% tomorrow. Next slide, please. Tomorrow morning by open. All right, this is Moderna. So here we go, right? So I bought at the first dip. There you can see it. All right, I sold as soon as it spiked. I was hoping it would spike a little higher, but it went to 326. I sold, and then I waited, and then this dip right between 1 month and 3 months. You can see it, the first dip, and then it spiked. The first dip is when I got in, okay? Then it spiked, and I mentioned again, hey, this would be a great time. It looks like a recovery. I don't know where Moderna finished today, so let me check that out real quick because I don't want to seem foolish if it fell off a cliff. But yeah, I'd be transparent anyway. 323.48. So yeah, that's not crazy. All right, next slide, please. All right, Blink. Yeah, so again, I just mentioned I purchased Blink first when it was 33.07. Then it dipped hard. I bought more. Next slide, please. I'm green. Oh, actually, I'm break right even. There it was. So I was showing you guys the first dip, which is the one before this line right here that I'm showing you, okay? So the first dip, I bought at 70. It went as low as 65. So when I tweet, hey, I just doubled down on my position, and when I tweet that I buy something, the people on my platform, the smart ones, see, okay, Matt paid $1.04. It's down to 65 cents. It's like 46% down. Okay, if Matt's not going to kill himself on this position, I can buy in. Matt's going to average down, but it doesn't matter. I'm still going to get the better deal than him. So some people are in at 70 cents. All right, I'm in at like 82 or 83 cents. No, 84 cents average, I think. Okay, next slide, please. Yeah, so some people are in there better than 20% on me, okay? So it's crazy. Again, the 10-minute rule, I guess, is back in effect. I wanted to go over a couple stocks. Okay, so Twitter, killing it after hours, up 5%. What am I expecting? It's actually 4.9 something percent. I'm expecting Twitter to, let's see, it's 4%. That's 70 cents, 72. I'm expecting Twitter to probably to be up 10% tomorrow. Yeah, over 10%. I'm expecting it to hit like 76. Okay, so these are things you can add to your watch list. If you're watching and you want to get value here, first of all, hit the like button. You want to get value, okay? But I'm going to tell you what I think of each stock after hours. You don't have to buy in now. You can look for it. If you're a day trader, if you're not a day trader, if you play options, whatever you want to do with this information. I'm telling you, if I'm correct about the market tomorrow, where these stocks will end up. Whatever your entry point is, that's up to you. These are my predictions about stocks based on the movement after hours and earnings, okay? First off, earnings are strong for 4-letter stocks. What does that tell you? It's telling me the Nasdaq's going to be strong tomorrow. And other NASDAQ stocks are going to relate off to that. So as long as earnings continue to be good, I don't know. I'm sure other companies are dropping earnings after hours. Okay. That's a good thing. If there are Dow stocks that are dropping earnings and they are good, that would be a positive. And you'll see it in, I'll tell you 1 second what the futures are looking like. Yeah. Wow. They're looking pretty darn strong. Okay. Yeah. So, I mean, earnings are a good thing. I expected it. I mentioned it on Monday. 330 companies are coming out with earnings this week, which is why I said I thought the rest of the week would be green. Now, I'm actually not wrong. Tuesday was green. Wednesday was green. Thursday is green, even though the UVXY did not drop. And if Friday is green, I will be correct. Now, who else is telling you on Monday after hours that the rest of the market is going to be green? Anybody? Who? No, nobody. Nobody, because nobody's that crazy to put themselves on the line and make predictions, okay? Haters, clowns, I don't give a shit. You know, I made a comment on Webull, right, to this other platform, and then I deleted it, and I was like, I don't care. I want Twitter to know about it. I want YouTube to know about it, and that's it. So this dude made a comment, and then somebody else like, yeah, he deletes his post. I delete my posts because those people are clowns. I don't need people making comments on every time I want to voice an opinion. I get 10,000 people. I have 13,000 followers. Like, enough people follow are like, hey, you're an idiot. Good. You don't deserve me. If you're here on YouTube, you deserve the information. If you're on Twitter and you follow me, you deserve my lessons. Hopefully you get everything that I'm trying to deliver. Okay, what other? So Snap is up 14%. I mean, that's mega strong. All right. I mean, I don't want to make a prediction past Snap because I would never chase on Snap there. I wish I still had my Snap options. Oh my God. The IV was just so sick. I had Snap options through last Friday. I sold them. What else we got? So 4-letter stocks are strong. EHang took a dive today. I almost got in there. So it looks so beat up today that I almost it's a Chinese company, which is why I stayed away. It was so beat up that I said it likes to rebound and recover, but I stayed away. Tiger was beat up today, but we don't talk about Tiger anymore. So Blink's not really moving after hours, but I'm expecting Blink to run tomorrow. So if I'm correct about NASDAQ being strong and Blink moving and that whole industry, because I know they like ChargePoint lately, and I know they even like Plug because I see the volume. So the whole thing is they play off of each other. Why did I go into Blink? Blink is extremely volatile. So if I'm correct about the market, how am I going to profit the most? Pick the most volatile stock. So if the market happens to run tomorrow, mega, and I get like 7.5% out of Blink, that would be like a move of $2.50. If Blink moves $2.50 and my options expire tomorrow, boom, guess who's making a lot of money? This dude right here. I'm sure I'll make like 180, 200% return. That would be great, okay? Again, I have a game plan. If not, worst case scenario, and tech is still strong, I'm not going to lose money in the trade because right now I'm at break even. So you get to average down once. I sometimes average down twice, all right? Here's the thing. Somebody asked me to explain, and it was Carlos. And he said, hey, dude, you said you were going to start off this week and give less positions out and focus more on 1 or 2 positions. And maybe we're losing some audience because you say one thing and you're doing another thing. And I'm like, Carlos, I look for the best trades. When I see a great entry into a trade, I want to deliver that to people. If they use that information and they enter the trade and they secure the best entry or they have strategy, I can't help it. This is why I'm here. I'm here to show you guys what I'm doing, all right? I'm here to show you guys volume when I see it spike and tell you and make predictions based on stocks and where they're moving after hours. So based on earnings and where some stocks are moving, I'm predicting tech is going to be strong. It's not a far offshoot. And if tech is strong and earnings are strong, then the Dow might be strong. And I'm looking at some other stocks that told me the Dow was going to be strong because they would have sold Carnival, Delta, American Airlines. Oh, airlines came out with earnings. So American Airlines, they kind of were like wishy-washy. Alaskan, which I've mentioned before, they like that. The stock is up. Southwest, which actually had earnings, is the funny part, right? Southwest is down 3.5%. I don't own Southwest. It's down 3.5%. They had the best earnings. Southwest did. And Alaskan. I mean, so that's what I'm talking about. When it's tough to hold through earnings, which is why I didn't hold Snap options, because they would have been worthless. For Snap, it was risk versus reward, 100% versus whatever the gain is. I guess it would be like 300%. The point was, earnings come in. Some companies have great earnings, and they love it. The stock goes up 15%. Other companies have great earnings, and the stock goes down 8%. So I don't get it. That's the one thing I swear. If there's one thing, okay, 2 things I don't understand in life. It's real estate. I'm not very well versed in real estate. And it's the fact that when I read earnings report and they make sense to me and I think the stock should go higher, it goes lower. And then I read an earnings report and it sounds like shit. And it sounds like the future is bleak. And I think the stock should go down and it spikes. And I get it, supply and demand, but it's almost like people mess with me. So I don't trade through earnings anymore. And it's so difficult not to because earnings come, 4 times a year. And if you're wrong, anyway. Okay, so what was I at? Questions, right? Let's get to some more questions, please. Yes, Tiger sold off. Okay, so this is a perfect question, Nathan, and I'm glad you asked because on struggling tech days, okay, today was a struggling tech day. Whatever tech went up, Chinese stocks were beat up. DD was off 10%. So you have to have Tiger, DD, Xpeng, Lee, Neo, group them all together so you can see BB, Bilibili, PDD, Baidu, put them all together because here's the point that I want to make towards Tiger. On a green day, so let's hypothetical situation here. Here's the situation. Green day tomorrow in the market. Dow's up 50, tech's up 180, okay? Tech is strong because of all the earnings. So those are the predictions, right? If that is true and Chinese stocks are okay, like not getting beat up like today, like DD was off 10%. So assuming they're like +2, +1, plus whatever, Tiger and Futu, F-U-T-U, will run together, okay? Tiger likes to run a little stronger, either positive or negative. So yeah, Tiger sold off today. My point is, if it's a good tech day and you see it and Tiger's up 2.5% or something like that, the same way it was down 2.5% to start today, it's going to snowball one way or the other. So it's snowball up or down. Today was off 2.5% and it fell probably like 10%, right? 9.5%, 10%, that would be my guess. The same is true. When Tiger goes up, it'll gain 12%. So that hasn't changed. There's crazy manipulation with Tiger, and there's a number of people that did call sweeps and put sweeps at $25 and at $15. So again, what I think you saw is consolidation, and it was pretty serious, and it was profit-taking with Tiger. So if the NASDAQ runs tomorrow and 4-letter stocks are running and Chinese stocks are okay, then yes, jump on board Tiger for one day. I don't care. I thought about doing it today, and then I talked myself out of it because I hate Chinese stocks. Next question, please. Hello, DDD, Plantier calls, expiring next Friday, educated guess. Okay, so that's what we all do, and that's what I ask you guys to do, to make educated guesses. Now, I already know DDD has such light volume, so it's impossible to tell you. So I'm going to zoom out and assume that tomorrow's a green day. DDD is probably going to jump 8%, 9% tomorrow. So you're expiring next Friday. So here's what you want to do. On days it goes up, let's say it goes up 8% tomorrow. Plan ahead, right? If it goes up 8%, that's about $2. So it's going to go to hit 28. If it hits 28 tomorrow, sell your options when it spikes past 28, and then plan for it to go down at some point next week and buy options to give yourself more time. All right, let me look at Plantier. I haven't looked at Plantier in a while because there's not huge demand for it. I base stuff on volume, and the volume for Plantier has been light ever since July 7th. And before July 7th, it was June 25th. And other than those 2 dates, extremely light volume. We're in the summertime. All the executives and the directors from Wall Street are all in the Hamptons, New Hampshire, Maine, wherever it is. Volume 17.5 million, but it's still so light. 3 inflow days. Again, it's going to match all the charts. The charts are like this. Any 4-letter stock, okay? We had 5 outflow days ending on Monday. Then you had Tuesday, Wednesday, Thursday, 3 inflow days. So you got 5 outflow, 3 inflow, and today was an outflow because it was a red day for most because most were consolidating. So what am I expecting? I mean, in a perfect world, tech could be super strong tomorrow. But I don't want to come on here and say tech's going to be super strong. But I would like to see tech make plus 150, plus 180 points. Now, here's what I got for you guys. If tech happens to be plus 80 points pre-market, futures, expect the same shit you saw Tuesday, Wednesday, Thursday, tomorrow morning. Meaning, if futures are bright green, it seems that people like to sell off before the market opens. Why? Because they're scared the market's going to sell off. And the institutions can precipitate that. If futures are selling off and at market open, the institutions sell 10,000 shares of various stocks, all of a sudden it looks like the market's throwing up, right? They only sold 30,000, but there were like 20, 30, 50 institutions doing it, okay? So the market looks like it just took a crap. All the retail traders get fooled. The markets fool you. The institutions fool you. They set you up. They steal your money. You scare sell your options. They're buying them cheap. They're buying them back. You scare sell your stock. It goes like this, and then it quickly bumps right back. So by 10:15, you're like, shit, I should have hold, which is why I have the option rule that we don't really make any major decisions before 10:30 a.m. because you're not getting fair value. I don't care if you have puts or calls. I don't care if it expires tomorrow, midweek next week, end of next week, August, or June, whatever it is. I don't give a shit. You're not getting fair value if you trade before 10:30. If you have an instant to just sell an option later on the day, say it's 1 o'clock, you're like, I'm going to sell my Jumia options, okay? Whatever it is, my Delta options. If you decide at 1 p.m. you're going to sell it, you look at Delta. You don't sell for the ask or the bid. You don't sell them right there. You plan ahead and you go, okay, if Delta spikes to 42, whatever it is, for $43, whatever Delta is, you go, I'm going to sell them. It's not like we make decisions on the spur of the moment. If that's how you trade wrong. We look at our positions each night and each morning and we say, what are we doing with this one position? Okay, if it goes here, I'm going to sell. If it goes here, I'm going to buy more contracts. We always have this thought in mind. If you're just watching, you're not learning. If you're just watching and holding your phone, watching your portfolio go up and down, you're riding the elevator, then you're not part of my platform. Then I can tell you that right now, how I make predictions. If you're just watching your stocks go up and down, whether it's AMC, GameStop, Space, I don't give a shit what you're invested in. If you're watching it go up and down, you're not part of my platform because we don't do that shit. I have lessons. We don't ride the elevator. We get out. So it didn't go to the 35th floor. It went to the 28th floor. I get out. I'll walk the other 7 flights. Do you understand what I'm saying? All right. Did I answer your Plantier call? No, I did not. Dude, I get so sidetracked. Yeah, because they all look the same. It's the same chart. So you're looking for tech to be strong tomorrow. That's why I went off that. You got to have a strong tech day. If you have a strong tech day, Plantier could pick up $1.30, which would be a major move. It would be like a 7% move. So, yeah, I guess I'm saying tech's going to have a very strong day tomorrow based on some of these earnings. Unless COVID spikes overnight. I mean, but they're buying Dow stocks, and there's somewhat of a rotation into Dow stocks. So tech is strong, Dow is strong, and I can't understand why the UVXY just doesn't drop out of the sky. Anyway, next one, please. Seeing Chris Bacon on the side. Yeah, I say I hate Chinese stocks because they're untruthful. Let's go. I love Chinese food. I like Chinese people. I went to a high school where it was like 50% Asian, right? In New York City, in Bronx Science. I was the token white kid there. I was like the minority. It was like black, Puerto Rican, Chinese, Asian, Korean. Yeah, it was crazy. All right, if you could, my opinion on ELF. Yes, I like railroad companies. Unless Jim Cramer likes this. If Jim Cramer likes CSX, then no, get me out of that. I thought they had earnings coming up. See, I mean, they're probably going to pop, all right? Is that what happened? Oh, yeah. What do they have earnings? There was an outflow day today, and volume was decent. It spiked. Now I'm looking at the 3-month chart. Yeah, they have room to run. I don't think it's going to go crazy. And after a spike like today, what did it go up? 3%? Oh, it spiked for 3 straight days. Yeah, I would be careful of it's reconciling down, to a different level there. I don't think it's going to spike another 10%, but I can see a little movement. So, yeah, it could go up, but it scares me because the chart is straight up right now. And I mentioned things don't go straight up. So if you buy in tomorrow and you get lucky tomorrow and it goes up more tomorrow, then I would expect it to consolidate on Monday. So I'd rather you just hold on the sidelines there or wait or come up with a strategy yourself of like, okay, if it comes down 89 cents, I'm going to buy it at this price. But right now, it's a scary one because it's been up 3 straight days and today was outflow and it still spiked higher. I know it's a rail line. I know rail lines are good signs right now. All right, good question though. Thoughts on Blink? Okay, well, hey, didn't I just talk about Blink? Yeah, I mean, of course. Oh, you're in a different contract than me. I'm in the 32.5s. And mine, yeah, so you paid a little too much money there, Ivan. The good news is, as I was talking about Blink earlier, 4-letter stock. It's a volatile stock. Charge point, plug. I've seen the demand there. So, yes, I think all 3 of them are going to roll positive forward tomorrow. I think there's infrastructure talk as well. Now, here's the catch. The Republicans early in the week when they did that fake vote shit said they would have something wrapped up by Friday. Tomorrow's Friday. I don't know. Do they have another vote coming tomorrow? Somebody enlighten me. But let's look at Blink after hours because why not? Because that's where I have some of my money as well. It would be silly for me not actually to look at mine. I focus on your guys' stuff. All right, so let me find So there's Twitter, still 5%. Snap is up to 15%. Again, there will be a pullback. So if you want to get into Snap for some reason, let's say it opens tomorrow up 15%, it's going to consolidate down to like 9%, and then it could spike up to like 18 or 20% if there's demand. So there's a good movement there. You just have to plan ahead and say, if it goes down to 9%, rather than thinking it's going down to 0%, you're like, that's as far as I think it'll fall, and then I'll jump on board. All right, so Blink is up 0.2 after hours. Let's just see what Blink can move in a day. Extremely light volume. So it would be a godsend if we had major volume. I could see like 9%. Light volume, but a good day, I could see like 4.5%, which would be like $1.20 something. So yeah, you're definitely. I would look to make 100% on those, if not more. Okay, but you set whatever you're comfortable with. So the key about my platform is if he's in at 73 cents and Ivan says, I would feel comfortable making 50% on this. So then I would say, Ivan, 50% would be 37 cents, let's say. So you'd set it for $1.10 and you're out. Now, if it spikes tomorrow and you could have got $2, okay, you could have got $2, but you made 50%. When you go into a place and you're like, I've got $20, I want to leave with 30, that's 50%. If you go in thinking I want to make 100%, great. When you go in not knowing how much money you want to make, then you become a bag holder. It goes up, you get greedy, you go, oh my God, I'm up 135%. I want to make double that. And then you're looking, now you're up 115, 95. Then you go, I want to sell it. By the time you sell it, you just gave away 50% profit. That's why planning ahead is so key. So maybe that's a case study for tomorrow. I can imitate everybody looking at the phone. Hey, Joe, my stock's up to, oh my God, it just went down. Because instead of watching, you're calling your friends to tell them about your stock, or you're bragging, or you're snapshotting it, or something like that. You're doing something to lose focus. So stay focused. Ivan, I think we're okay tomorrow. Next one, please. All right, Ed, what do we got? DPZ, huge run on earnings. CEO on Kramer. Okay, oh, yeah, that's funny. Buying puts, yes. Okay, Ed, you get me, man. You get me. See, the funny thing is, here's what happens when Kramer mentions a stock, and then I'll actually look up the stock. When Kramer mentions a stock and has a CEO tonight, it generally spikes for like 1 or 2 days. So let's say DPZ and the market's good tomorrow. DPZ will run up, okay? Then the market's a little wishy-washy on Monday. It'll fall harder than it ran up. So let's see if it goes up 5% tomorrow. It'll fall like 15% on Monday, and then it'll keep falling because Jim Cramer is a jinx. And he says sell out. And, he's friends with, Domino's Pizza. Yeah, Domino's spiked pretty hard. I don't know what happened. Was it earnings? I saw this before the bell. It was up, $68, 15% today. It's got to be down after hours. It's not even down that much. Yeah, I mean, damn, I might look at puts on this. I got to put this on my list. That's ridiculous. First of all, does anybody eat Domino's Pizza? Because when I eat Domino's Pizza, it kind of tastes like shit. Does anybody else agree with me? I don't know. Maybe middle America doesn't agree with me, and people will tweet at me later and tell me Domino's Pizza is delicious. But if you eat Domino's Pizza, I mean, I've had it. My kids eat it. Why that? I mean, unless they're making just so much money. Earnings on 7/22. Was it earnings that came out? I mean, today's the 22nd. Had to be earnings. Yeah. I mean, I think it's ridiculous. I can't imagine how much money they're making on Domino's Pizza, unless they're just ripping off the people that work for them, or they're putting shitty ingredients into Domino's Pizza. And then if they do that, people will figure it out and never eat that shit again. All right. Yeah. Maybe buy puts. I don't know. Yeah, I mean, it would be very tempting. I will actually look at that. It's going to the top of my list. Domino's does suck. I see what you're saying, Chad. All right, next question, comment, please. All right, thoughts, Nike put. Okay, I hear you guys been talking about Nike puts for weeks. Like 4 days ago, people were talking about Nike puts. So let me actually see, because I know that when stocks hit an all-time high, and Nike is a brand name that everybody knows, and then you have the Olympics coming up. And although we can't be at the Olympics, guess what they're wearing? Guess who's branding the entire Olympics? And this is what I noticed about every Olympics. Whoever was branding it, Coke, Pepsi, whatever it was. It used to be Root, the clothing company, and every Olympics, their stock would spike ridiculous. Okay? So, yeah, I would be very careful about playing Nike puts around Olympic time. And I've heard people talking about it for days. So if I'm wrong, I'll say I'm wrong. But I told them the chart looks good, that there was some consolidation for a couple of days, and it'll probably explode. And there it is, 163. And I believe I said it was going to 165. So, yeah, I would not be playing puts on Nike with the Olympics going up. It's showing unusual activity. Did people play puts? Let's see. No, they did a call and they did a sweep, bearish sweep, which means when you do a bearish sweep, you're buying all the calls, but you're only paying the bid, okay? So you're not in a rush to have them today, meaning earnings aren't coming out. You put in your bid. When that hits, you're just picking them all up. So someone's buying all the Nike calls, dude. I would stay the heck away from that. And I mentioned that, again, to the lifetime part. Oh, I wanted to mention this too, okay? Because I've been asked a lot about lifetime memberships. It's unfair. You have a separate platform for lifers. No, lifers paid to be a lifetime member. It's not a separate platform. It's a community chat room for them because they're lifetime members. They've all had a lesson from me and they all know different ways to trade and they talk about it. Everybody else, we're on Twitter. We are creating a new platform for this. But again, I charge $3.49 and I do it for the masses. Let's go into that because I haven't gone into that today. I charge $3.49 so 1 million people can join and trade better and take their money back from the institutions, which is why I ask you all to please share, to like the video, analytics, to subscribe. Just subscribe to YouTube. You don't have to pay $3.49 to join my platform. If you don't, so here's what my platform does. I give market updates. I started to interrupt this. I give market updates, meaning I give you the direction of the market. When it's going to drop off, I tell you it might drop off, but it might only go this low, and here's what you're looking for. So these are constant updates, including lessons. All right, so if you break it down, I'm charging you $3.50. It's 50 cents a day. So if you have no clue which way the market's going, I mean, you're like, geez, it's going to be green tomorrow. This guy, he gets it right a lot of times, and his theory's right. Yeah, so I don't charge a hell of a lot. I'm not making this into a commercial or telling you have to follow me, you have to do this. But yeah, there are some positives, and I'm not one of those services that charges $100 a month, and it's not all about me giving you the best picks or the best this or that. It's me giving you strategy. It's me teaching you what you're doing incorrectly and helping you. All right, let's go back to that lesson. When you mess up on a trade, like those of you who scare sell today, I told you, break out your notebook and write down how you screwed that one up, all right? So anybody that scare sold today, your error today was that you didn't plan ahead and that you scare sold into the worst part of the market. It was spiking or falling the most, and you gave up your position. So anybody, I tell you, if you have a notebook, write that shit down, all right? All right, next question, please. Yeah, Nike's gapped up. What do you want? All right. Okay, I just added up my losses on. I didn't look at this yet. I'm glad you made profit. So I won't. Russ is great. He invested $97,000. He made a $30,000 profit, which is excellent because I mean Russ was down $45,000. Then he was down $15,000 the other day. I was up like $1,800. He turned a profit. I turned a profit. Yeah, Schwab went down. Okay, good job, Russ. Because I think he lost money on Jumia. When I said to sell, everybody else is averaging down. They didn't take advantage of that spike. And we're talking about like a month or half ago. So, yeah, I remember this shit. All right, next question comment. I'm happy for you, Russ. All right, thoughts on STX? 86, 730, 121. Do you think you should average down? Look like it consolidated today. All right, that's a great question. I love the microchips. I did see they got an upgrade from somebody else that put them over 100. My price target on STX was 104. What did I do? I scare sold. I made fun of myself yesterday. I sold at $79.80, and today I know it went up. And yesterday, people were showing me options. I showed you guys slides. People made 100%. So, yeah, what went up today? It had 4 straight days of inflow, even though it dropped. It's at $83. So, yeah, it's strong. Now, in a best-case scenario, when's your options expire? In 1 week. So, let's say 6 trading days. 5 days, let's say you get positive $1 on average. So, that would be $5. You'd be at $88. And your break even is $87. So you actually need 5 massive days, 5 $1 days. So that doesn't seem so good. I wouldn't average down like that. So let's talk about the right way to average down, okay? However much money you put in. Let's say you bought 4 contracts. You're in for that. So you spent $484. If you're averaging down, you double the money. So you spent $484. I would ask you to spend $968. So you spend $968 to average down. Here's how you average down. You go in or at the money. So you would get the $83 options tomorrow at whatever the lowest point is, okay? You would buy out till 7:30, and you would use double the money, and that's fine. So when you get the bounce, so let's say it doesn't bounce all the way to 86. Let's say it goes to 85.99. Your 86ers become worth 0. Your 83s, which you put double the amount of money in, make 100%. So right there, on all of your money, you're going to be at 50%. So when I talk about the proper way to average down, which is episode 37, okay, you either use double the money, or if you're using the same expiration, the same strike, use the same amount of money. All right, let's get another question up there, please. Hey, Matt, thoughts on coin expiring this Friday? All right, well, let's take a look at it. You live dangerously. I'll tell you that much. Anytime you bet on an option, I mean, you're looking for instant gratification. And here's the thing about coin. It has sold off. Well, we can't count those 5 days. So it's a flip-flop. I happen to like coin. So you want to hear the good news is? Well, the good news or the bad news for you. It's either going to happen Friday, Monday, or Tuesday. So 2 of those days do not work for your option. The one that happens tomorrow works for your option. Coin's a 4-letter stock. I already said the Nasdaq's going to be strong. You better hope, Fung, and I like Fung, that tomorrow is the day for coin because coin is going to explode, and it's going to explode 20 points, and that would be like 8%. Every time I'm talking about a tech stock exploding, I'm looking at 6 to 8%. So it seems logical. It matches up. So again, if it doesn't happen tomorrow, please don't get on me. If Blink doesn't move tomorrow and it moves on Monday, don't get on me. But it's going to move. These 4-letter stocks that I'm pointing out, they're going to get a pop of 6 or 8%, including coin. I still think coin's a $300 stock sometime before the end of the year. Next question, please. I want to get all the questions as possible. All right, Diego, man. All right, how am I doing? I'm doing good. Man, Romeo. Hey. Currently at 20 cents. You average down once, about 80 cents. You think it might drop? Yeah. So we have Romeo is not my favorite stock. I own stock in it just because it was so cheap, and I think I'm positive, but it has such light volume. Even on demand days, the inflow days, it's light volume because it's had inflow 2, 4, 6, 7. 7 out of the last 11 days has been inflow for Romeo. However, the stock doesn't move. All right. So you have like 68% of the days inflow and your stock still looks like shit. So you need volume. There's only 1.38 million. You need like 8 million volume. So will it move by 820? So 625, it takes a whole month. Yeah. If it does move, it's only going to move to like 870 at best. And you have $9 calls. Get the hell. I mean, they're worthless, right? Yeah. That's what you're telling me. Yeah. Don't waste your money on that, bro. If you want to average down on Romeo, so here's what you do. Again, this is what I would do. So you're in for Romeo. Those things are going to be worthless. That's why they're 20 cents. I'm looking at it. I don't know why you bought more. I talk about when you average down, we're looking for the bottom. So if the stock looks like shit one day, give it tomorrow. If it looks like shit tomorrow, don't average down. Wait till the next day. Get it. You give yourself a chance each day to say, no, I don't want to average down today. For me, for Carnival and Delta, I took 2 weeks to average down on that, and I still picked wrong, and they still dropped, and now they're doing much better. Okay, so no, I don't like that move. If you want to hold on to them, fine, but you have $9 calls, you're probably going to be worthless. I mean, yeah, probably going to be worthless, bro. That's a bad one. Okay, so if you want to average down, here's what you do. You average down, you say, how much money did I put in? I put in $500, I put in $100, $600. You say, okay, I'll take $1,200. I'll buy out in the money, so it's $7 right now. I'll buy the $7 strike for December. And that way when it pops to $10 or $11, sometime by December 21st or December 17th, $10 or $11 by that date, then you can make your money back. But that way there's no pressure, there's no stress. Do you understand? Does everybody understand? I'm not telling this individual that I would take a risky position. I said if I would average down, I would go to December. I would put in double the amount of money that he spent already. So if he spent $500, I put in $1,000. If he spent $1,000, I put in $2,000. Understanding that I'm going to hold it until it spikes to $10 or $11. So if that happens August 1st, great. I'm going to sell my position even though it's December. If it happens, I'm just looking for the spike. I'm not looking to hold till December. I'm just buying additional time so I don't stress myself out and go, man, I hope this stock moves by 820. And if it doesn't, you're not worrying about it. Why is that not a problem? Because summertime, light volume. I would expect more stocks to pop in September and October than happen all summer. Probably just in September. When we get back to trading, you'll see stocks pop up and down every day, whereas during the summertime, not so much. I mean, you just have high hopes. All right, next question, comment, please. Yes, Ellie. Excellent. So I've been with that. Oh, this is what I mentioned. So Ellie's a lifetime member. This is what I want to say real quick. If anybody wants to be a lifetime member, they're not open, but we are taking a wait list. I think there are like 8 or 9 names on the wait list. We're probably going to let it fill up to like 20 and then let those individuals sign up or something to that extent. I have no rush to do that right now because I give a 30-minute lesson along with this private other area that you get to be in. So, Ellie, okay, I've been math minute. I can't guarantee when you were yeah. So the point is, a lot of people say this, and I got tons of DMs on the side today and yesterday. My rules work. Hey, look at my account. Hey, do this. I tell you guys, tweet it in public. I think it's great. I mean, it would be rude of me to be like, hey, fuck off. You made money. Congratulations. I only charge you $3.49 a week. And that's not that. Sometimes I'm thinking that, but I don't say that. No, I'm not really thinking that. The point is, oh, did I say a bad word? The point is, please, I love seeing that stuff. But it's more important that it's shared in public Twitter because there are people out there that say, geez, I don't know. He only charges $3.49. It's probably like some crap, something like that. I'll watch him on YouTube. I see most of that shit anyway. No, you're missing a lot. Okay, next time. Thanks, Ellie. You're awesome. Yeah, so my timing isn't perfect. I could be early or late. I mean, people, said on Monday, hey, UVXY, what happened? I was like, I'm a day early. What do you want from me? All right, hey, Matt, 3-month JWN looks poised to run. JWN. I thought I just had that on my thing. Did I take that off today? Let me see if I'm right about that stock first. JWN. No, I wasn't right. Yes, it is Nordstrom's. Why would Nordstrom's be J? Yes. So Nordstrom's chart looks like Macy's, looks like the Gap, looks like other stuff. There was consolidation. It's been outflow. So yes, it seems to be at a bottom point. When Dow stocks make moves and the Dow is up every day, or when it goes up 100 points, and Dow is strong, I would watch out for this one, Nordstrom's right now, because of COVID and the Delta variant. And I think we have 60,000 new cases a day. So again, I watch this. All right, if we get a spike that's over 10% overnight, I would be selling all my Dow stocks. I know it's crazy, but that's how the market reacts. It really doesn't matter because people are still doing shit. The airlines went on and they said people are still leisure travel, are still traveling. Okay. Anyway, thank you guys for being here. Thank you. Hit the like button. Let's get another question. Hey, Matt, would you please look at CCIV? I'm in at $30 call expiring October. Looks like a sell-off after voting. Okay, let me ask you this. Why do you have $30 calls? Again, the rules, and I don't care. Here are the rules, okay? You get in or at the money. I don't give a shit if you're going to October, December, I don't know. Go wherever. You're going in the money, though. So CCIV, I get it was $25. So your call should have been like $25. Yeah, of course it's going to sell off into the merger news or whatever it is. Everybody, or not everybody, retail traders, newer traders say, oh, it's gonna fly once whatever happens. Now, I do like their cars. Their cars are cool, but their chart looks like shit. Now, the 3-month chart looks like shit. The 1-month chart looks like absolutely crap. Now, it doesn't mean it can't turn around, okay? It tried to turn around July 8th, and then the markets got beat up a little. It spiked a little. It tried to turn around July 19th and 20th, and then it sold off for 2 straight days because that is manipulation. The hedge funds know that the retail traders buying into this because they're doing their vote or they're doing merger or whatever it is. You're out till October. Man, you've got $30. Okay, so I'm going to tell you the same thing. Here's what I'd go to average down, okay? So to average down those, if you believe in the stock, CCIV, which I like the stock. I think it could be above $30 or $30 by October, $32, $34. I can tell you right now, I've looked at the chart. So if I say $32, that's great. But I guarantee your options are probably, I don't know, $32. That's what I'm predicting for that stock. If you need to average down, you would say, okay, I'll go with October calls still. But instead of $30 calls, let me pick the $22 calls because that's $22.90 now. Or, the 20, whatever it is, and use double the amount of money. If you're in for 500, double it. That's how you average down. Next question, please. So, yeah, anybody that wants to average down, you have to be happy or content or think your stock is going where it is. All right, Ellie, you entered into Nike puts. Yeah, I already said you're wrong about those. I said people were wrong, and I mentioned that I think Alex might have said Nike puts to everybody. I mean, everybody has their own opinion, so I just disagree with it. I think Nike's good. I think it's a Dow stock. I think it's a name brand, and I wouldn't bet against Nike ever, okay? At some point, if it flipped to 200, yeah, I'd bet against Nike. But right now, it made a jump, and now it's making little moves. It consolidated for 2 days, and it went higher, which, like I said, it was 163. Now, the good news for you is it expires 8/27. So hopefully, it'll go down one day, and then I would sell. I wouldn't see that Nike's going down multiple days in a row, and it's just going to drop like a biotech or a pharma company. Because I don't like Nikes. I don't own any Nikes, but it's a great brand. I own more Nike clothes than I do shoes. Anyway, go ahead. Next question, man. Boris, any questions? All right, let me see if we got any other questions here. I'm going to literally, I guess not. Okay, eBay's or beast, you're over 1,000% been good. I love everybody. Everybody have a good one. I'm done. I can't wait to get out of here. I got to go cook dinner for my girls. You guys were great. Thank you. Please hit the like button. If you want to take a chance, join my platform. If not, subscribe to YouTube. It doesn't take much, but you must push notifications. Have a good evening, everybody.